Why I left the IRS, my personal journey. Accounting is the language of business. Warren Buffett. My name is David from Anvil Tax, and I want to tell you my story. I want to tell you about when I was young in college. I heard that famous quote from Warren Buffett, the great oracle of Omaha. It was interesting because my friends at the time when I was graduating college, they were graduating with degrees in management or marketing, and their bosses were making them go back for additional courses in accounting. And I'm like, wait, let me save a few steps. Let me just get my degree in accounting and just avoid having to go back. And I can still take management and marketing and all these other classes. But then I realized, as I was studying accounting and the tax classes that I took, I didn't think that they were boring. I thought they were exciting because I recognized that the number one expense that people have over their lifetime is not their house, is not their vacations, is not their whatever it is, lost investments, but it's taxes. I became obsessed with figuring out how to decrease my taxes legally, ethically, morally, and above board. What better place to do that than to go work for the Internal Revenue Service, to understand the ins and outs, to understand what they are thinking and why, to understand their playbook, to understand what in the world do they think about and why. What do they eat for breakfast, lunch, and dinner? What do they wear? What do they think about? But before I go there, before I tell you that story, I want to tell you a different story. I want to tell you the story about my entrepreneurship journey growing up. I grew up in the wheat fields of the Columbia Gorge in Sherman County, a little town called Wasco. Most people have never heard of it. There's about 400 people. It's a pretty small town. A lot of farmers, wheat fields. I saw the entrepreneurship spirit within the farmers. Farmers are such hardworking people. I think our country was based upon an agrarian culture. There was more independent small farms, shops, and blacksmiths. I love blacksmiths because Anvil Tax and my family tradition of working on the farm and being a blacksmith, and that's where Anvil comes from, is my great-grandfather, this farm, and having Anvil was a centerpiece of the life of building equipment, machinery, art, jewelry, and that symbol and making something, a craftsmanship. And that's where Anvil Tax comes in, is this craftsmanship. So on the farm, using our hands and waking up before the sun comes up and working after the sun goes down, I saw the hard work, but also saw the benefits of my friends who were employed by their parents on their family farms. I saw how they got to have the nice toys with the trucks and the motorcycles and the quads boats, and even some people had airplanes. They had to go in a boat to go look at cattle. They had to go to various places, and they got to write off the stuff, and I was jealous. I wanted those nice things. And the farmer kids and the entrepreneurship families were able to pay their kids and contribute money to their retirement account or education funds and be able to write off these tools, which I call toys. I think they're toys. And I was jealous, and I wanted that. And it irked me because I wanted all the cool things too. And I ended up working for a lot of my friends' parents on the farm, but I didn't get all those tax benefits. I got some of the benefits. I got to play with some of the toys, but it wasn't like this inherited type of situation, and I get to be a kid working on the farm. And now that I have kids, I'm employing them in my business with video editing and all these things that I need to do to run a business, and I get to pay my kids and be able to write stuff off, and my dog and all these other things. When I went to work for the Internal Revenue Service, I thought it was a great job. I thought it was a career job for a lot of people. People were retiring. It was honorable until I told my grandma, and bless her, she's like, oh no, not them. You're working for the Internal Revenue Service or the IRS? And she was like embarrassed and almost ashamed. And I think it was just a strong reaction. But then I also recognized that in social situations, when I would be meeting people And people are like, what do you do for work? And blah, blah, blah. And starting having small talk. I'd be like, I work for the Internal Revenue Service. And they're like, see ya. It was not the best place to make friends and influence people. Trying to get dates and having social events and having to be a little bit, what's the right word, crafty and wise about what I do and how to break that ice. And they had to get to know me before I just said, I work for the Internal Revenue Service. I'm the auditor, because people are like, oh, you're scary. You're one of them. I don't know if I can trust you. I remember auditing somebody and going to a social event and seeing that person that I was auditing. It was actually a church, and I saw them a few pews back, and I was like, oh, I better move. So it wasn't awkward. It didn't feel like I was like spying on them or whatever. I wanted to give space, but I'd see people around in social events, because an auditor, you just never know. They could be on your kid's little league team or a sports team. They could be the coach or whatever. I was volunteering with youth sports when I was an IRS auditor, and I would interact with people, and they would get to know me, and they're like, what do you do? And I'd tell them, and they'd be like shocked. So that situation with my grandma and situation with social events was a little awkward. I kept working at the IRS for a while because I really wanted to understand the ins and outs. And it was interesting because when I started with the Internal Revenue Service, and in orientation, they brought people in, and they had this big group of about 100 people that for about 3 or 4 states around, we met up in Seattle, Washington for its orientation and education. They probably spent about $150,000 to $200,000 on training IRS auditors. So it was a big investment, and it took years for them to go through the training process. Some people had masters in tax. Some people had PhDs. There's people that with judicial doctorates that were attorneys. And they're like, the IRS said, we're glad that you went to college. We're glad that you learned how to study and take tests. Now forget everything that you've learned, because we're going to teach you what you need to know. That was the first time that I heard about the Internal Revenue Manual. Most people are familiar with the Internal Revenue Code, and it's everywhere, right? We talk about 401k, we talk about other code sections that maybe it's in society. We talk about things, it's in the news, it's on TV, wherever, it's on the radio, retirement accounts. Most things are governed by the Internal Revenue Service, but they speak a different language. You have a decoder ring to interpret that and to decipher what that is. The Internal Revenue Manual is a playbook. The IRS has certain procedures, rules, regulations that the staff, the employees have to follow. And it just makes sense. They have these standard operating procedures. They also have guides for auditing certain segments, like dentists, doctors, attorneys, accountants, construction, online retailers, crypto, coin-based laundromats, or convenience stores. So there's guides and there's policies of like best practices. Look for these things. Make sure that these things are documented. So I learned those things beyond just learning the Internal Revenue Code. Since I've left the IRS, I've been to just dozens and dozens, maybe hundreds of classes, continuing education classes, because I need hours of continuing education. Usually I get more each year because I love to study and I love to keep up, and there's all this stuff to learn. Nobody talks about the Internal Revenue Manual. Why should they? Unless you're like dealing with audits all the time, unless you're dealing with the Internal Revenue Service. But having that knowledge is really important, because being smart and navigating those treacherous whitewater. Oh, that brings up a good point. In between, when I was going to college and before I worked for the IRS, I worked as a whitewater river guide in Idaho. That's where I went to college. I went to Boise State, the blue Smurf turf, as a whitewater river guide. I learned some valuable lessons as a river guide. I applied those lessons from whitewater river guiding the way, and now as a tax professional, as a tax expert in reducing people's taxes, planning and helping them to reduce to the legal minimum, now in retirement and upon death, I can guide them through those treacherous white waters of the Internal Revenue Code and help them to maneuver and navigate. The Internal Revenue Manual is important in understanding what happens when you get audited. and the procedures that go along with an audit. Hopefully you don't have to deal with an audit, but you just never know. The IRS is hiring more auditors. There's been a lot of funding. This has been in the news quite a bit as the IRS is auditing and getting more money, because there's a lot of people that haven't filed their taxes. I've noticed that the people that have paid and filed, if they don't have good books and records, they typically overpay because they're missing deductions, or they don't know how to document, and then they get audited, and then it becomes a mess because IRS will look at all your bank statements and all your transactions that are going in, all the money going in, and it could be loans, gifts, inheritance, it could be transfers. The IRS just reports all that income and says you got to figure it out, if they don't have good books and records, to tie out all those deposits and transactions. And then the taxpayer, the client, is left with this huge tax bill. And it's a waste, because if good books and records are not kept at that time, then what happens is that somebody gets a big audit bill. There's that old saying, if you want to increase your productivity, if you want to increase your time, if you want to double your efforts and double your productivity, stop doing things twice, 3 times, 4 times, 5 times. So I make the case, be diligent about your books and records, not only for the compliance standpoint, but also for forecasting and understanding what is needed. What are the drivers? What are the 16 things? I talk about the 16 drivers in a business that you need to keep track of. You don't have to keep track of all 16 of them at one time. There might be 2 or 3 things that you want to really just focus upon, but knowing that there are 16 major things that you can keep track of that will increase profits, that decrease expense. One of my mentors, he kept on saying, you want to decrease your top line, increase your bottom line, and decrease your headaches. I think that's wise. That's sage advice, to decrease your headaches. And often it's so fascinating to study companies that go bankrupt. Typically, the companies have had a banner quarter, month, or year before they go bankrupt. And why is that? Well, it's so curious. It's typically because they have all this potential money, these sales coming in, and then you have expenses going out, and maybe you haven't collected for 30, 60, 90 days. Maybe that money's tied up somewhere, but then you got all this labor, products going out the door, and the money doesn't come in. Maybe there's refunds or chargebacks or whatever, and they don't actually get that money, and they can't pay the bills, and they have to file bankruptcy, and it's tragic. And that's where having good records, having good forecasting, knowing your numbers, being diligent about your numbers is so key. Talking about numbers, and this video is about why I left the IRS and telling you about the perils of what I experienced at the IRS and how frustrating it was. Now, going back to my story, as I went off on a little tangent, but I do that from time to time because, as you might notice, I get a little passionate about what I'm doing and why am I doing it, because it's about the benchmark. It's about beating the benchmark. It's about playing the game to win and not to lose. One of the interesting things was when I started at the IRS back in the late 2000s, I was trained by people who had been around for a while. My managers had been in the Internal Revenue Service, and some of them were hired before the Roth hearings in 19. Roth hearings meant to bring the IRS temperature down, to make it a kinder and gentler organization. And there's a lot of people who said a lot of bad things. I don't know if they're true or not. But anyways, the whole point was some of these managers were saying, listen, they were saying, when I was a freshman, when I was beginning at the IRS, I was judged on $1,000 of production time. That means that when they're out in the field and auditing and not doing paperwork, that they were basically getting $1,000 for every hour that they're on the clock doing an audit. And that was obviously before that Roth hearings, and IRS came more gentler and kinder. But the managers emphasize, they're like, if you were to understand what I'm saying, and I can't judge you by that $1,000 an hour rate anymore, as being a grade A auditor, which means you meet all the boxes and you're getting your 5 stars on everything, so you get your merit raises and your promotions and all that other stuff. And they said, I can't judge you on that anymore. I can't rate you on that. But if you read between the lines, you'll understand that's how I was raised, and the School of Hard Knocks was this for me, and I've been trained that way. So if you can listen close enough to hear what I'm saying, you might want to do the same. So even though it wasn't the letter of the law, it was the spirit with some of those managers. And I remember talking to one manager, and he said, if you dig deep enough to anybody's tax return, you're going to be able to find some deductions and be able to squeeze something out of it. And I looked at him, I'm like, even yours? And he just smiled and shook his head and walked away. Again, reading between the lines. That emotional intelligence. So it was a bit of a challenge. But I stuck with it until I couldn't anymore. Until I was just like, I want to help people. And I didn't feel like the culture was the best that suited me. Now, I know that there's a lot of great people that work for the IRS. And I don't want to put the IRS down. I want to be a guy that's a love and abundance. But you have to understand the talk. You have to understand what they're going through. And there's that saying, an ounce of honey is going to attract more flies than a gallon of vinegar. What that means is having emotional intelligence. When you're talking with the IRS, when you're dealing with the IRS, these are people. And they do have a tough job. And they might not like their job. They might have had a bad day. Because typically, when you're an IRS employee, you don't get a lot of fan mail. You don't get a lot of like pats on the back and accolades. And these are people too. It's that golden rule. Treat others as if you want to be treated. And that love and abundance, because I believe that comes back around. And with transparency being so important, and that is like one of the most important pillars of having transparency in society and saying, I don't have anything to hide. And that's so key. It's like chills. Because there's so much fraud. There's so much misconception and deception. It is this sad, and it's refreshing to find people who are honest, that are truthful, that don't have an agenda. Or if they do, they disclose it. And being a true fiduciary. And this is why I had to write this book. And this is why I had to communicate the power of this. Because there's so many stories that I hear. As I mentioned before, taxes are the biggest expense that we have over our lifetime. What happens when we kick that tax time bomb down the road, right? With retirement. And retirement is typically the most important thing. Is we work so hard, we want to enjoy the fruits of our labor. And what happens when we can't retire because of various situations? Or most people are concerned about running out of money. And it's sad because we don't know how long we're going to live. We don't know how much healthcare is going to cost. We don't know what taxes are going to be. So typically, people in retirement, they have this nest egg and they're trying to do the best they can to keep that money around as long as they can. They want to enjoy their retirement. What happens when somebody dies prematurely and they can't experience all that? Or in other situations where an attorney, for instance, an estate planning attorney, and this is part of my pet peeve and part of what's gone into this book and why I need to get this out there, is because there's a lot of estate planning attorneys who will set up a will for somebody and say, oh, that's really all that you need, but they don't set up a trust. And a trust is so important to avoid probate, because setting up a trust is, on average, nationally, $1,500 to $3,000. But to go through probate, it's 3 to 9%. So, for instance, if you had a $500,000 estate at 9%, I think it's about $30,000 to $40,000, and it takes 6 months to 2 years for that estate to close and to go through. So somebody could be losing tens of thousands of dollars on an estate when an attorney could have set up an estate for a few $1,000s. So I hear it a lot where estate planning attorney, oh, you don't need to, it's complicated, it's not that big of a deal. But really what's happening is that they're kicking that time bomb down the road. And as I mentioned before, taxes are really anything that increases as your income increases. Maybe probate is not a tax directly, but it's taxed indirectly. And there's so many other things in life that are taxes in my mind, even though if it's not governed by the government, that's an expense that is based upon your level of income that could be avoided. So many people don't have proper estate planning. They don't have tax planning. They don't have the life insurance. They don't have the wills. They don't have power of attorneys. They don't have all these other things ready for retirement. This is called the 9 tax mistakes, biggest tax mistakes in retirement. If we talk about taxes as beyond just the money that we're paying to attorneys, but it could be legal fees, it could be insurance, it could be other things. Let's start planning for that. Let's start helping and equipping people. This book was also born out of like my need and my desire to help my parents. As my parents are baby boomers and my in-laws, and I wanted to equip them because as they start passing away, and it's God forbid and sad, I hope that they live a long and prosperous life, but there's going to be that time where things need to be done from an estate standpoint. I want them to be prepared. I want to make it as easy on us, the kids and the grandkids, as much as possible to avoid those expensive probate, the privacy issues, the expense, and this long drawn out process. So estate planning, I address that, and the succession planning, I address that pretty heavy. I really spend a lot of time talking about that. And this story is so important, and that's why I had to write this book. I had to tell people how to save taxes now in retirement and upon death. If our biggest asset that we have is our estate, and within our estate, our retirement, and if our retirement is going to get hit hard, or our estate's going to hit hard with a tax, what can we do to reduce it? How can we keep the money in our pockets instead of frivolously paying it, instead of wasting it upon things that could have been avoided? And as I've said so many times, it's just my mantra, this could have been avoided. Those 5 words are so expensive. The story of this book that I tell is my heart. And I'm communicating this for my generation as I'm in my late 40s and my parents are in their 70s. And we're seeing the baby boomers aged 55 and up are about 40% of the population that controls 70% of the wealth in the United States and probably the world. And as the wealth wave, the $14 trillion wealth wave comes crashing down, there's a lot of fraud out there. There's a lot of misconception. There's a lot of bad advice and a lot of waste. And I don't want your family to waste money. I want you to do the things that you want to do with your money to enjoy your life. That's my heart. I'm trying to give this gift and this knowledge and starting this conversation because taxes, I don't know if you've noticed this, it's complicated. It's hard. Legal stuff and just trying to go through and understanding the best. And guess what? Taxes are going to change and laws are going to change. They have to change. They have to change. It's political. It always changes. Staying on top of it, having good, wise, smart people and staying on top of it, but educating yourself. Being smart with your money is so key, and that's the conversation that we're starting and the conversation that we want to continue to have. And going beyond that knowledge into transformation. I don't want to give you knowledge, I want to give you transformation. I want this to be the best book that you've ever read because it's from my heart. And it's basically from my family to your family. I want you to have love and abundance and blessing. And I'm so inspired by Dr. Stephen Covey. I love those poetic words to live, to love, to learn, to leave a legacy. And I think that's on the positive side of the coin. And we'll get there And that's like the paradise. And sometimes we have to go through the muck and the mire. And the problem is the mess that Bob and Sally had to go through. And Bob and Sally's mess is now my message. And the message in this book is that muck and the mire. So don't let the same thing that happened to Bob and Sally happen to your family. Protect, guard. This is your legacy to live, to learn, to love, to leave a legacy. What's that chills, man? I'm just like, I get excited when I hear those words. It's life. And without a proper plan, things are gonna fall apart. And that plan's gotta be maintained. I want the best for you and to your family. Please pick up this book, take a look at it, start this conversation. Let's have this conversation. Let's see what we can do together. And I hear so many stories of people overpaying their taxes big time. I have conversations with people, and we propose a tax plan for somebody selling their business. I remember this guy was selling his business for $3 million, and we're going to save $800,000. And then his attorney shot it down. And then after the taxes are filed and about 6-8 months later, comes back, oh, can we still do that? Sorry, it's too late. You had to do that before the sale. So planning the sale. And another interesting point is that a lot of times people think, oh, I'm going to have one sale. It's going to be once and done for my business. I'm going to exit. Why have that mindset when we could sell it 3, 4, 5, 6 times, having multiple bites of the apple? We start looking at the most wealthiest people in the world, like Elon Musk and Jeff Bezos and wealthy people. They don't own 100% of their company. And we get so fixated that we have to own 100% of our company, but the wealthiest people don't. They've sold it and they multiply it, and every time they sell it, it's another bite of the apple. And they get more money and they build wealth and they protect wealth. And I personally don't want to ever stop having a business, because having cell phones and home office and travel and meals and all these deductions that are legal, ethical, moral. And this gets back to when I started the IRS, that when I saw these people, the people that I was auditing, deducting their cell phones, their computers, their home office, traveling. I remember going out as an auditor to people's houses and auditing at their houses or at their businesses. I would get up in the morning, have my coffee, read the news, social media, get in the car, drive. I would have lunch, drive home, all that stuff, computer, home office, all that stuff. And the difference between as an employee versus somebody that had their own business, as an employee, I got reimbursed for some meager miles once in a while, but never lunch. I had to bring my own lunch. I couldn't deduct my cell phone. I couldn't deduct all these things. I couldn't deduct my kids and having to help my business. And that's why I had to fire the IRS. I had to give them the finger and walk away, because I wanted something better. And that's why I'm on this track to help people to do smart stuff with their money, to put money back in their pockets now, in retirement and upon death. And the way that society is going is that I read stories and the news, and they say 2/3 of people are going to retire into poverty, and that they're expecting Social Security to take care of them. And that's sad. A lot of people are having to work until they die. You look at Warren Buffett. He's working not because he has to. He doesn't need more houses, more yachts or anything, but he does it because he loves it. Then in his 90s. I want to work because I love it. I want to work for the tax deductions, and I want it to be fun and doing the things that I enjoy, communicating. Hey, protect yourself. Stand guard. And I believe that there's this 2/3, 1/3 defense, offense, defense, offense. So protect, build, protect, build, protect, build. So we're just constantly protecting and building and protecting what we have, because if we build and build and it's just boom, gone, that was a waste. So don't be like Bob and Sally. This transformational stories. Pick up this book, go through it. It's on Audibles, it's on audio places, it's Kindle, it's a hardcover, paperback. I mean, get it, read it. Let's have this conversation. I'm excited to hear what you have to say about this. Until we speak again, blessings.